Brad, thanks for being with us. Walk me through your downgrade.
Great. Thanks very much for having us. So as you said, they missed expectations for new bookings coming in light for the first time since their IPO back in the summer of 2019. They pretty much blamed it on slower demand stemming from the mid-market. Customers there are not buying as aggressively, and larger customers doing slower rollouts of existing new contracts.
So how much of this do you think, is company-specific versus a reflection of these macroeconomic conditions and what we could expect from competitors as we start to see more reports from them?
Sure. So I think the macro has a big impact here across the board. That being said, I also think that CrowdStrike seeing increased competition from the likes of Microsoft. They have a security bundle with their E5 product, which some of our checks are leading us to believe they're seeing some traction there as customers look to save money and maybe not using the best product in the market, which is still CrowdStrike, but Microsoft's good enough at this point and causing them some competitive issues. To your point, we think that this will continue to play across the broader software group, security specifically, over the coming quarters. You also have the issue here where customers bought a lot of security software over the course of the pandemic in order to protect themselves, work from home, and et cetera. And they're now working off some of that inventory.
Obviously, you'd been a lot more positive on the company. Give me some sense here as to why 120, which is essentially not far from where the stock is right now, is an appropriate price for the stock now.
Yeah, so look, for a long period of time, this was a stock we had a value on EV to sales because of the rapid growth and limited cash flow. To management's credit, they've really leveraged the business, run it very efficiently. They should do north of $1 billion of free cash flow in calendar 24. So the target price is based on about 25 times that number, which is in line with our growth rate for ARR and revenue in the out year.
And I want to just come back to the comments you made about Microsoft. I mean, again, while macroeconomics certainly are playing a role here, are they losing market share then, in your opinion? And is that something that may well continue?
It's something to keep an eye on for sure. I mean, one of the other concerning metrics here was new customer adds were down about 10% year over year. That's the first time that's also happened since they've been public. Management put a lot of that on delayed sales cycles within the mid-market. That's the place where Microsoft would have the most potential impact. So it is something to keep an eye on.
All right, finally, I mean, just in a week where we are seeing a lot of enterprise software names report earnings, we've had a lot of conversations on our network leading up to this about this idea that maybe enterprise software, enterprise-facing tech could be more resilient in the face of a potential recession just because the digitization of everything and then the securing of it is a secular trend that's going to continue. Is that your belief, or when you see a report like this from CrowdStrike, does it raise questions about this actually being the first place that other companies are going to cut spending?
Yeah, so I think it absolutely continues, just at a more normalized rate. We clearly had a very aggressive investment during COVID as people moved to digitize, especially front office offerings. But on the flip side, Workday last night, while they modestly reduced forward expectations, they meaningfully increased their profit profile, and that stock's reacting very well. So I think the key takeaway here for investors broadly is those management teams that are focused on controlling what they can control, which is their OpEx, will be well rewarded in this market. And Salesforce will be an interesting one later this week with a lot of speculation around what the top line will be, but more importantly, can deliver on the OpEx side.
Okay, we'll be watching. To your point, Workday, best performer in the NASDAQ 100 right now. Brad Reback, thanks for joining us.